Momentum signals and trend signals both remain bullish. We'll be watching to see if momentum signals begin to change. If the blue line here, the momentum line, begins to turn back to red, it will likely be the first to change. Again, we got back-to-back bearish candlesticks. I'm talking about that through this video. So again, if the candlesticks end up getting confirmed, it could shift momentum. Please support the channel with the link directly below that allows me to be able to provide you this information. If you follow the link, it'll take you to a secured site. You can donate any amount you want. Take a moment to help out. I would really appreciate that. Please let me know you like the indicators and charts by supporting the channel today. I don't have any. I turned all those offers down because I don't want to sell you a bunch of stuff. Just ask that you help out as you can, but I need your help in order to make it work. So please consider helping out today. I thank you for that. The VIX got an inverted hammer today. The S&P got a hanging man candlestick. The opposite, again, this is a bottoming tail or a bottoming pattern. The S&P has a topping pattern. We may still go a little bit higher. We may not. I'll show you in the video. It's possible we get some divergences, but it could be that this is it. Candlestick today that we got on the S&P, candlestick yesterday, completes a topping process, topping pattern, candlestick pattern. But candlesticks are meaningless unless they're confirmed. So we've got to see the VIX come back up here and close back above today's high. We've got to see the S&P close below today's low. It could happen on Friday if we start a reversal, either just gapping down or going up, gapping higher, and then turning down to complete the divergence. We'll be watching to see how it unfolds. You have an inverted hammer here. The S&P is going to new highs. The VIX is making a higher low. There's a discrepancy. Often discrepancies mark turning points. See if the candle plays out, if it is confirmed in the next two sessions. Closing back below the lower band. We'll see if we close back above it if volatility returns. There are going to be some Fed speakers tomorrow. That bad news from the Fed, penciling in just one cut. Eventually, the market is going to sell off with that. The market turns with the Fed meetings. Time is not going to be any different. Either going to be a continuation or a reversal, and you've got major resistance overhead. It's likely going to mark a reversal. Momentum finally got into positive territory, but it is forming, as I told you, it would likely do so, but it's forming a divergence with the S&P 500. All the divergences that we're seeing in the daily, the weekly, monthly time frames. We got above the 50-period moving average. Momentum did not. It wasn't buying into it. Now it's turning above into positive territory, forming a negative divergence, showing that this move is likely going to mark a reversal. Now we got another positive inflation report on the back of that CPI. Wholesale inflation, the PPI, producer price index, came in better than expected, with wholesale prices falling in May. We got that good report on the CPI yesterday. Another good report today on the PPI as expected. The month-over-month number fell in May, down negative 2.2% here on the headline number. It came in at 0 on the core number. Again, both beating expectation. We're supposed to be on the lighter side anyways, 0.2% on the core. It came in at 0. The year-over-year headline came in lower at 2.2%, lower than the previous month's year-over-year number. The core came in right in line here from the previous one. It beat estimates. They don't have it listed here, but I heard that on one of the financial channels, and again, 0.2. So we had a good report. Keep in mind, the inflation data, the headline numbers that we got with CPI and with PPI, remember, we saw dropping. It's now rising back up, but oil had dropped sharply. It's being reflected in the data that we're seeing. Now moving to the positive seasonality for oil, it has risen back up. See the reports next month tick back up, so just keep that in mind. I do want to point this out. We got initial claims, and it came in at 242,000. Came in higher than expected at the 225. But again, we're seeing the highest number that we've seen in 10 months now. So eventually, we'll start seeing weakness in the jobs report. Eventually, we will see negative numbers with job creation. Unemployment rate will tick higher. Likely going to see this the second half of the year. We've got a warning sign right here with the report that we got today, 242,000 with the initial jobless claims, the highest reading. And these readings were coming in lower earlier in the year. Now it's beginning to tick up. So again, that's going to be eventually showing up in the jobs report at some point if this trend continues the initial claims. And we continue to have warning signs with the Dow. We also have warning signs with the Russell. I've been talking about the warning signs with the Dow. I'll be talking about the warning signs with the Russell. The Dow turned off that major trend line from 125 years ago to 1899. It was down triple digits today. It rebounded as the market rebounded. That gave us back-to-back candlesticks on the S&P. I'll talk about that. Interesting stuff. Just like we have back-to-back bullish candlesticks before the move up, now we're getting back-to-back bearish candlesticks. The Dow was down 0.17%, down 65. The S&P was up almost 13 points, up just under 0.25% to close at 54.33. Nasdaq was up about 1/3 of 1%. The Russell was down 0.8%. The Russell's giving us warning signs right now. The VIX was down 0.83%. The VIX closed just below 12. I've been talking to you about the warning signs on the Dow and how, again, the Dow, S&P and Nasdaq are making new highs. The Dow is not. It's only gotten a Fibonacci retracement. It formed a double top pattern, negative divergence in the weekly time frame, and it did not recover like the S&P and Nasdaq did. Again, heavily influenced by just a handful of stocks, as we've talked about at great length and detail in the past. We have potential head and shoulder patterns developing on the Nasdaq and the S&P 500. The Dow has a potential double top here with a bear flag forming. It so far has turned off of the 50% retracement, just getting above it and not able to reach the 61-point Fibonacci. The Dow here on the 60-minute chart, it's just come back up to the 50% retracement, and it stalled there, and it came back up again, and it reversed there again. Even make the case in the 60-minute time frame that the trend line has actually broke, but again, this did give us a bottoming tail, so you see it's breaking down and kind of back testing here. So again, I'll be watching to see what becomes of this here. If the Dow can get a bigger retracement up to the 61.8 Fibonacci, or is that all she wrote? Market starts reversing. Could the Dow confirm the double top pattern sooner rather than later? And again, the Dow led the charge lower here. The Dow led the charge lower here. And the Dow led the charge up. This is a huge red flag. And again, the Russell is also giving us a huge red flag. Let me just say this. Again, oftentimes, divergences develop between the Dow and the Nasdaq, and I've talked about that in the past quite a bit, that going on right now. The Nasdaq's made new highs, the Dow is not. There's a divergence between the two. I've talked about the divergence also forms sometimes between Nasdaq and the S&P. But right now, S&P is making a new high because of the heavy tech influence and, again, just a handful of stocks controlling it, whereas the Dow, it's not doing that. Between the Dow and the Nasdaq, Nasdaq's moving to a new high, the Dow is not. Same is true for the Russell and the Russell and the S&P 500. This massive warning sign between the Russell and the S&P 500, and again, this happened back over here at the top. Remember, and let me just draw it in here real fast. Again, remember at the top in 2022 for the S&P 500, it went higher. The Russell did not. They diverged from one another. Okay, the Russell had already peaked. Did Nasdaq diverged at that time with the S&P as well? Well, right now it's doing the same thing, and if you can see, the S&P is going higher, but the Russell's making a lower high, and it's turning off of the trend line. If you connect this peak with this high right here, well, we just slammed into it, and that was the March peak. So for March, S&P is moving above the March high. The Russell is not. The Russell is not moving above the 2022 high. The S&P is diverging. So you've got a double dose of divergences going on, one in the more recent price action and another larger one. Again, what markets do, tops. The Russell and the S&P diverge from one another. The Dow and the Nasdaq will diverge from one another. Sometimes at turning points, the Nasdaq and the S&P from one another, but that's not the case right now. They're both making new highs. Doesn't always happen, but I wanted to bring this to your attention. Now, as we're doing this, we're forming a head and shoulders right over here. The weekly chart we're looking at, this is the Russell ETF right here, and this is the S&P. Bring up the daily chart, you can see that, again, we are forming a potential flag, and you're seeing on the daily chart right here is this in the weekly, this potential channel, this bear flag pattern, if we start coming down and breaking back below the 250-week moving averages. We bounced, by the way, off of key support here. Again, if we came down and we started breaking this level, then the Russell would get a bigger dump. But right here, this area is what I'm showing you on the daily chart. You can see that here in the daily time frame with the lower and the upper boundary here. And again, we went higher than these highs, but we're still getting a lower high and turning down off of the trend line that I just showed you from the 2021 peak on the Russell, and getting this divergence with the S&P. And that's forming this head and shoulders pattern here, which could be a potential reversal and take us back below the 200 period moving average here in the daily time frame. Just want to make you aware that, again, not only are we getting a divergence here with this head and shoulders, a divergence between the Russell and the S&P in the most recent price action, you've got it long term. That is a huge red flag. It's very bad sign for the stock market. Here's what happened today. We, again, had this gap higher on the CPI. We gapped higher today. We got a black candlestick on the 5-minute chart, and we had a gap and trap on an intraday basis. We gapped higher, and then we turned down, went back to gap support, and reached it ever so slightly, just above our 200 period here in the 5-minute time frame, and then rebounded. Again, institutions are selling into the rally. They were back in March. They're selling into the rally. And then they let it drift back up. Still might form a divergence here, but we did get back-to-back bearish candlesticks. I talked about the topping tail yesterday on the daily chart. I'll get to that in a moment. Again, tomorrow, if we gap higher and then start turning down and drop below the 200, or if we just drop below the 200 with the lower high, again, we could start seeing a sell-off and take out this low. I do expect that we're going to get a post-Fed sell-off. Maybe that starts tomorrow, and we get a topping tail weekly bar. We've overthrown the trend line, which I've been talking about there on the weekly chart, the upper channel line. It could drag into next week, but I do expect a post-Fed sell-off. And again, a lot of times, post-Fed sell-off and not a sell-off. I mean, we got very bad news. We got, the reports are coming in better here. Very bad news. The Fed, a very hawkish tone out of the Fed. Remember, earlier this week and last week, I was telling you that we are going to get these estimates for Fed funds rate, and I told you it's going to go down to 1 or none. Been at 3 for the Fed. Market was not expecting that to happen, and not seeing an immediate reaction. It's masking the distribution that has already begun. We're already seeing the distribution again. So again, it is going to, the market is turning with the Fed meetings, by the way. So this is likely going to form a top. Said, again, there could be a delayed reaction. It could happen before this week ends, at the end of the week, or here with a lower high, lower low, or we could get the diversions on the intraday charts, the 60-minute chart, the 15-minute chart, the 30-minute chart. And we can go up and we could go higher and get a gap and trap and then start getting some real selling tomorrow. That's certainly possible, or possibly it goes on into next week. We'll see if we don't gap higher, if we just start gapping lower or start selling off. Do we start coming down, moving to fill this gap, the CPI gap down here, and start the reversal process? But I do think it's going to happen. And again, we got this really bad news out of the Fed, but because it doesn't immediately happen, then the retail investors go, it's not going to happen. It's going to happen. We're going to get a post-Fed sell-off. I told you why, or it happened, and that was correct. I told you also that we are going to go to new highs. We were going to go close above the upper Bollinger Band and get a CPI rally, and all those things have now happened. It's not going to last. Watching the 200 here on the 5-minute chart. I'll be watching to see if we start moving below it tomorrow or gap higher and then start moving below it. But again, I am going to be looking for a reversal in the market. I told you we still might form a divergence here on the 15-minute chart. Still might go higher and then go down. We talked about this yesterday and talking about it again today. I told you we were going to go higher because ahead of the CPI and the Fed, we had formed the bull flag over here. At that sell-off, the previous sell-off, I told you we had formed this bull flag over here, and then the continuation triangle. We talked about all that at the time. I told you I was looking for a move to higher levels. Upper boundary of the channel in the weekly time frame that I've talked about in every single video. Signals turned all back to bullish. So again, we expected that level to be tested or to overthrow it. We've overthrown it, and we'll be watching to see how we close the week out. But if we gap higher, we may get a gap and trap tomorrow. We did get back, if we don't, you got back-to-back candlesticks if we start moving lower, bearish candlesticks anyways. I got two trend lines I'm watching on the S&P 500. I've got the lows over here that make a nice channel, a nice-looking channel that is directly overhead, and we kind of just turned off of it right here, and that was a peak over here. It makes a nice-looking channel. But then we also have this trend line that's making this rising wedge that's probably better seen in the daily time frame from the low right here. So, and I didn't draw that very straight, but you can see what I'm talking about. So we have a rising wedge going on from these highs over here and these lows over here, and then we have also a channel. So if we do form the divergence, and I talked about this yesterday as well, if we do form the divergence, we could go up, push up into that channel, and then come back down and start moving to fill this CPI gap right here. And again, for a reversal, we're going to come back and start breaking these trend lines down over here. So we'll see what happens. We do have, just like the divergences that are developing on the RSI and the awesome oscillator in the weekly time frame, we have divergences in the daily, and we also have divergences that are forming here in the 60-minute time frame. Some of the more recent price action, some with the peak over here in May, the previous peak in May, or peak here in June. Again, if we do form a divergence, we can go up, we can gap higher, we can hit this level, and then we can turn. That is very, very possible. Start seeing distribution and start getting a sell-off. And I think there's a strong possibility of that we sell off on Friday. We gap higher, close below or close at that trend line or below that trend line on the weekly chart that we pushed above. I'll show you that in a moment, but we have, again, here's the trend lines. You got the one including the shadow or including the low over here, and then I've even taken it and excluded the shadow here in the daily time frame, but have included that level on the 60-minute chart. But if you exclude the bottoming tail, you got a really nice looking rising wedge here in the daily time frame on the S&P 500. And so again, the channel line here in red, the rising wedge in blue. Really nice looking head and shoulders formation that could be under construction. Left shoulder head formation. We could be headed back down here into the July meeting. We could be headed back down over here into the July or September meeting. Again, if we get a turn with this Fed meeting, I've talked about the Fed meetings are calling the turn, so I expect a reversal here, all likelihood. And if we could bounce, we go down to the July meeting, rebound, get the right shoulder into the September meeting, again to get the sell-off, complete this pattern. Now the RSI is moving higher. It does not have to form a divergence. It could. Sometimes it doesn't, but it is moving higher. We have a nice looking divergence on the MACD, and other indicators are forming nice looking divergences. Down here at the money flow, and again, the stochastic, it actually rolled over at the lows today, could roll over tomorrow if we get like a gap and trap. If I come back here, again, look at the March peak. We've gone higher above the March peak. Look at the print parameter. It's making a lower high. It's forming a divergence right here. So again, a huge warning sign right there, that large divergence. Take a look at momentum. Momentum also forming a divergence here in the more recent price action with that May high. Again, I think you got a good shot that we're going to come back down to this 4,900 area right here and probably get some kind of bounce. Maybe a right shoulder. It's too early to tell whether the pattern will form. I think you got a good shot. The Dow's forming a double top. Head and shoulders with the right shoulder already completed on the Russell as I've shown. Told you back over here, something big was about to happen. He was predicting that we we're going to get a move. I told you I thought it was going to be up, hit the upper boundary of the channel. I thought that we'd get a push above the upper Bollinger Band. I was looking for a fifth wave higher above the bearish engulfing candlestick over here. You have a nice looking 5-leg push higher, and I think it's coming to a conclusion now. And I think we've got 1, 2, 3. I think this was 4, and I think we're now getting 5 that may or may not be done. I was looking for a couple of closes above the upper Bollinger Band. Well, we got that topping tail yesterday, and now we get a hanging man candlestick. Does that ring a bell? Do these patterns ring a bell to you? watching the sell-off, and at the lows, near the lows of the session, I talked about if we rally back up, we can get a hanging man candlestick, and that is exactly what happened. Does this ring a bell, though? Look at this. Again, I did a whole video about back-to-back bullish candlesticks. This was the Fed day right here. Do you remember that? I talked about the back-to-back, the inverted hammer, and the hammer candlestick that followed. Look at this. You've got the exact same pattern that's developed here, only a bearish version of it. Here, the inverted hammer is bullish. The hammer is bullish. I told you they needed to be confirmed, but look at what followed, this big gap higher. Look at what you have here. You have a shooting star candlestick followed by a hanging man. The exact same candlesticks, the exact same pattern, but only this pattern is bearish. They are opposites. This is a hammer. This is a hanging man. This is an inverted hammer. This is a shooting star. These happened at the end of an uptrend. These happen at the beginning of an uptrend. I talked about those bullish candlesticks because I expected a move to either fill the gap at 5,200 or the new high scenario. I've talked about those three different scenarios: weak lower high, a strong lower high, or a higher high scenario. I've talked about those at great length and detail before we ever hit the 20-week moving average, and ever since then. In the higher high scenario, but it could be coming to a conclusion. But now you have these bearish back-to-back candlesticks. We'll be watching to see if we get a close below the upper Bollinger Band Friday or Monday. Okay, and when that happens, there's a good chance that that's going to mark the top. Why are we seeing these candlesticks? Well, the institutions selling, the retail investors buying, they're buying, and then the institutions are selling. And then we saw the same thing today. We saw the gap higher, and then the institutions sold into the rally, and then the retail investors bought it back up. Retail investors are considered the dumb money. They are buying. The institutions selling into the rally just like they sold into the rally back in March. And the Nasdaq didn't go anywhere for 7 weeks. It's because distribution has been taking place over time. So I'll be looking for confirmation of these candlesticks with a close below today's low and a push back below the upper Bollinger Band. Now, maybe we go higher and then we turn. Maybe we just turn and that's it, and that's all she wrote. Still form a divergence on the 60-minute chart. That's possible. You gap higher, you could get something like a bearish engulfing where we can get, a gap higher above these candlesticks, but then we reverse and they become confirmed. Okay, and then you need a follow through. You need confirmation and a follow through. Otherwise, the candlesticks are meaningless. It's have to be confirmed. We saw these bullish candlesticks. They were confirmed with closes above them. Here we need closes below them if we are to reverse. Back-to-back bearish candlesticks after back-to-back bullish candlesticks after the Fed. Here now we get back-to-back bearish candlesticks with the Fed and after the Fed. Again, this was with the Fed, this was the day after the Fed. This was with the Fed, this was the day after the Fed. You can't make this stuff up. I mean, it's absolutely amazing. Back-to-back reversal candlesticks. See if they're confirmed. We'll see if we close back below the upper Bollinger Band. I told you we were going to go higher. I told you we were going to rally with the CPI. We were going to close above the upper band. I also told you we're going to end up closing back below it. Likely we start a reversal here because major resistance directly overhead here, slamming into right now. I do want to let you know the S&P has an 8 of a 9 count. 9 count could possibly complete tomorrow. We got back-to-back bearish candlesticks now. If we get a price flip and start closing below the bar from 4 bars ago, complete. As long as we don't do that, we can complete the 9 count, but it may not be a perfected signal unless the 8 or 9 bar is ahead of the count. If we go higher, then it still may be a perfected signal. I'll talk about it after tomorrow's close. Just want to make you aware of it. If that does complete, it may not, but if it does complete, you'll have a 9-9 reversal pattern having set up on the S&P 500 daily chart. The S&P 500 is up 1.62% for the week. It's up just under 87 points. So we got the rally that I was looking for, okay? And that's what we're going to be watching here is, again, this trend line. Do we close back below it, or do we close at it by Friday's close? So again, we could sell off tomorrow. Even if we close strong, I told you, again, sometimes trend lines change. This could be changing, but you've got major resistance here in the weekly and monthly time frame. Not just this trend line, but going back to 2000 on the monthly chart, Dow has turned off major resistance from, again, 1899, a trend line that has called the tops and over again, and I turned off of that trend line. If we do sell off, I'll be watching to see if we get a topping tail or if we, close below this level, and if we don't, it's no big deal. It just may not include shadows on the daily chart and slightly change, or you make it a slight overthrow here, and that's still possible. But Bitcoin overthrew the channel. Bitcoin's doing the exact same thing. It overthrew the channel when it hit it over here at a topping tail. Do we get that here? Look at the divergence. Again, this divergence is going to produce a sell-off, probably a major reversal like it did over here, as I've talked about at great length and detail. We're watching, we got that possible divergence can form on the 60-minute chart. It doesn't have to. It may get a lower high. Did you hear what I just said? We don't have to go higher. Again, we got back-to-back bearish candlesticks. That may be it. But it is still possible that we go a little higher and complete that divergence on the 60-minute chart. I will be watching, not just the RSI, with the divergence. Got it everywhere. Indicators everywhere are forming this divergence down here on the MACD. I talked about it on the Awesome Oscillator. Currently, we have a green bar. We'll see if it remains that way by the week's end. Even if we start to turn, it still may be green and then start turning red next week. But you've got the divergence, just like on the MACD, stochastic. On the weekly time frame, S&P weekly time frame here, these divergences are going to play out. Complacency is through the roof. Same thing going on with the Nasdaq. Again, Nasdaq's moving higher. The Awesome Oscillator, the MACD are not. Those institutions are selling into the rally. Mind, we have these divergences in the daily time frame on the S&P. Here on the MACD, we have it, as I've talked about. You got it here on the Awesome Oscillator. Size are moving slightly higher, but divergences are still with the MACD, the Awesome Oscillator, the money flow. A lot of indicators have it. S&P daily chart here. Again, I expect to see red bars begin to show up. It may start tomorrow. We may start seeing red bars tomorrow. It may be, see it next week. We're going to have options expiration. Rising wedge with the S&P 500 and divergences forming. Look at the Nasdaq. Again, we had a little topping tail yesterday, but we went higher today again. We had the Broadcom earnings that helped the Nasdaq, but it got a hanging man candlestick today. You still have this divergence that has formed. You have, again, a nice-looking rising wedge. We also have a channel, again, if you include the trend lines. I'll show you on the 60-minute chart. But, again, you still have this head and shoulders pattern here. Close above the upper Bollinger Band 3 sessions ago. We continue to close above it. When we close back below it, it could be tomorrow. It could be on into next week. But when we close back below it, and it could be tomorrow, close back below it, again, could start a reversal. Will trigger a Bollinger Band reversal signal if we do close back below it, meaning we'll either be going sideways, like over here when we close back below it, or you'll be starting a reversal. Again, major resistance, likely a reversal will take place. But you have divergences. Now, again, those RSIs are still going higher on Nasdaq and S&P, but you have divergences on other indicators. Again, if we exclude the shadows over here, you got a nice-looking rising wedge on Nasdaq. Same thing for the S&P, as I talked about. But you also have a channel in the 60-minute time frame. Now, let me just say this. Maybe the trend line right here, maybe that's it, and that's a peak, and we begin to turn. That's very possible. You got a hanging man candlestick. Here it is up close. Again, a black candlestick, hanging man candlestick. The black real body can be bearish. So we have that candlestick, but then we have, again, this rising wedge. If we exclude the shadows, here we have a channel on the Nasdaq, and let me refresh this. If we do try to go higher initially tomorrow, I'll be watching this trend line right here, and again, drawing a parallel boundary to these lows down over here. And again, we had this little intraday gap and trap that took us back here to the momentum line and the cloud. If we bounce, I'll be watching this trend line that would form a little tiny divergence right here. That may be it. And again, we may not do that if the hanging man candlesticks that we got today mark a peak. The S&P was slightly lower than the peak Fed day, the prior day. Nasdaq was slightly higher. So again, we'll be watching to see what becomes this. Nasdaq was helped by Broadcom. Again, I talked about these 5-leg push higher. The 5-leg push higher, I think it is wrapping up here. Nasdaq and S&P 500. We'll see if we hit these trend lines or not. Again, I talked about it on the S&P. Here it is on Nasdaq. Have to get a divergence. We may not. Looking for a sell-off and a reversal can unfold in a couple different ways. So I'm just showing you, again, it may form a divergence. It may just start turning. We'll see what happens. Looking for a post-Fed sell-off. Very bad news from the Fed. Lowering amount of cuts for 2024 down to 1 from 3 to 1. Market did not expect that. It's going to eventually sell off because of that, but there's a delayed reaction masking what is going on. I believe we're going to get a post-Fed sell-off. It could start this week. It could start next week, but the market has been turning with the Fed meetings as I've talked about. Chart for the Nasdaq, same thing. You got the divergences all over the place. Now we're overthrowing the trend line. It may not be that way by the time we close on Friday. We may have just had an overthrow. It may be an overthrow. We're hitting another trend line. This is the log scaling. We're hitting another trend line as well with the linear. And look at the divergences. And again, the divergences have called the tops and bottoms over and over again. Recently we had one here at the March high right here, and we saw over an 8% drop, a rebound back up. Now you have this rising wedge. The divergence on the MACD, it's all over the place on indicators in the weekly time frame. Look at the linear scaling, look at the channel line. If you exclude the shadow right here, we're slamming right up into that upper channel parallel to this lower boundary. Look at that. And again, the rising wedge, we're overthrowing it here a little bit more on the linear scaling, on the log scaling just a little bit. People use linear scaling, some people use log. I use both because you get good information from both. And this is an example of that. I wouldn't know about this trend line if I just use log. I wouldn't know about the other trend line if I just use linear. I look at both. Hitting this trend line right on the nose here, we're hitting the other trend line and overthrowing it there. The log scaling forming the rising wedge going back over from that peak over here. Divergences are going to play out. We're going to get a very ugly sell-off. And again, before the weekends, you could have a topping tail here on Nasdaq. If we sell off on Friday, you can see a topping tail here with this big wide range bar. Nasdaq's currently up 3% for the week. It's up 575 points. It could reverse by the end of the week. It's close. And even if it doesn't, still reverse next week, I still think you've got a shot selling pressure before the week ends. So do keep that in mind. We'll be watching. I said with the S&P, again, it's got a wide range bar. It can have a topping tail before the week ends. Doesn't have to. It can form another reversal a different way, but I'm just saying we could end up selling off, start the reversal, and get the post-Fed sell-off I've been talking about before the week ends or on into next week with options expiration.